Hi, I'm Ben, and today we're going to be talking about investing $50 a day, every day, over the course of 365 days. So let's take a look at this experiment of mine in which my bank account is the guinea pig. In this video, I'm going to be going over all of the details surrounding this self-imposed challenge of mine. It's going to be fun, mostly because for you, there's no risk. And for me, I'm trying to limit the risk, but I mean, there's still a risk of literally $50 a day going down the toilet. But we'll get into all the details. Here's what will make this all work. I'll be investing $50 a day into the stock market using ETFs, which have insanely low trading fees. We're talking like 1 to 2 cents a day. Like really, really low. Before we continue, I just want to acknowledge one thing. You can either think that $50 a day is an insubstantial amount, puny, why would you only invest that much? Or you can be on the other side and say, wow, that's a lot, I can't afford that. Or you could be somewhere in the middle. But this is scalable. You could invest $1 a day or $100 a day or $1,000 a day or more. It doesn't actually matter. What matters is the consistency, and that's kind of the moral of me doing this. This is what I want to experiment with. The other good news is that no matter where you are in your financial journey, you can always smash the like button for the YouTube algorithm. That, or at least you'll be entertained by the numerous mistakes I make in the next 365 days. The first thing that you need to be familiar with for this investing every day challenge is the concept of dollar cost averaging. The simplest long explanation is from Investopedia, and I'll put their explanation right here. You can pause the video for that, or I also wrote down my own description, and this is the Ben version. Dollar cost averaging is regularly purchasing equities at set time intervals, regardless of their price. Doing so, theoretically, entirely removes the emotional component of the trade completely. This is beneficial because our lizard brains are still there to mess up logical, premeditated decision making. And this is important because during COVID-19, stocks absolutely plummeted. This happened in 2008 and 2000, all of those crazy events. They've dropped like 40%. Thing is, a lot of people sold for losses. No, don't do that. Just don't sell for a loss. That's silly. Just hold on. And it's actually even easier with ETFs because they are rebalanced, and any stocks that do go under and their stock goes to zero, you aren't going to lose out everything. Now that you are familiar with dollar cost averaging, I'm going to take it to the extreme. So usually it's done quarterly or monthly or even weekly at predetermined intervals. I'm going to do it daily. It's plotting a graph to match the index of the Canadian stock market's top however many companies. Every single day, no matter if they're high or low, I'm going to get every blip, and it will average out over time. That's my hope over the next 365 days. If we were dealing with regular stocks and not ETFs, this whole premise would be so stupid because you would drown in trading fees. But the good thing with ETFs is that, especially with Questrade, their fees are ridiculously low. When you're stock picking using Questrade, the minimum that you can possibly spend is $4.95. There would be so little profit, it would be ridiculous. On the other hand, because Questrade's trading fees for ETFs are so incredibly low, I'll be only spending about 1 to 2 cents per day. That's somewhere between $2.53 at the low end and $5.06 at the top end for an entire year of trading every single day. If you've run the math, you've already realized that there's something amiss though. So we'll get to that in just a moment. At this point, you might be wondering what ETFs are. So here's the Investopedia version, the long one, and here's mine. In our case, ETFs are pools of stocks with low management fees in predetermined industries. As a long-term couch potato investor, or in this case a spinny chair investor, with an investment horizon of 30 years plus, ETFs offer great low-risk diversification, without the dizziness of the ups and downs of the market. That was not even on my script. That was just like came up with that. Yeah, that's right in my head. Now that you know what ETFs are, the next step is going to be running your numbers. In my case, my numbers, because we're doing this with my bank account. I need to know my numbers so that I know how much I can comfortably invest every day. So this is how I'll be able to invest it. Let's go. On average, I clear $3,508 a month from my salary as a digital content specialist. Multiply that by 12 and you have an annual take-home salary of $42,096. That's after taxes, RRSP contributions, and benefits, etc. I am excluding any bonus cash from tax returns or write-offs, etc. though. Next up is my rent, which is really easy to calculate. It's just $900 a month. Everything's included. My cost for food averages $155 a month. My phone plan is also really easy. It's always the exact same every single month. And I'm with Kudo, and it costs $56.50 per month for 5 gigs of data and unlimited everything else. I'm gonna try doing like one of my first affiliate links, so if you check the description, we'll see if it actually shows up. I'll see if I can do that. Otherwise, check them out. They're actually a really cool company. I've been with TELUS and Kudo, basically the same company, for most of my life, and they're pretty awesome. So after all of those reoccurring expenses, I'm left with $2,400 a month. Next, just to make this easier, we're gonna make each month just 30 days. I know that's not right, but we'll just do that because it gives the gist. So now $50 times 30 days equals $1,500 a month. That leaves me with $900 left over for saving and discretionary spending, or whatever. I will need that because I'll be rounding up during this experiment. Finally, and debatably, wait, no, not debatably, the emergency funds. You need one. Don't invest without one. Like, you need to be able to sustain your lifestyle for at least 3 to 6 months, just in case things happen. Do that first. Don't invest without that. That should be your first step. In my case, I have $15,000 in a high-interest savings account in Tangerine Bank. Now, I went ahead and calculated this. This is kind of funny, but $15,000 will basically be anywhere from 6 months to 12 months for me of emergency expenses. If anything were to happen, if I were to lose my job, etc. Like, I guess my expenses are just really low. Oh, one thing about Tangerine, if you're in Canada and you want a bank account, I would switch to them when they have a promo. They usually have like a 2.75% interest in their savings account for any money added to that account within 6 months of you starting with them. I would take them up on that with any extra money you have or your emergency savings. Just huck it in that account because you also get a $50 bonus when you use my orange key in the description below. Now, there's only like 3 slots, so that'll probably be filled up really quick, but try it. If not, open up an account anyways, because that 2.75% is like unheard of with most banks. Use it for 6 months. After that, I mean, they actually have some good credit cards and stuff. For those of you who are seeing through the cracks of this plan, let me address the burning question. How can he be investing $50 a day for 365 days per year if the stock markets are only open, on average, for 253 days per year? What? So, I'm gonna have to just do some adjustments here. It will still be $50 a day for 365 days a year, but it will just be compressed. So let's do some compression here. It's kind of like a zip file. No. It's gonna be 365 days times $50 per day equals $18,250. That's what I'm gonna be investing over the course of this whole next year. Now, 18,250 divided by 253 days is $72.13. So there you have it, $72.13. That's what I'll be investing every single trading day. Technically, it's still $50 a day, but it is $72.13 on average on every single trading day over the next 365 days, but really it's 253 days inside of that 365 days. Does that make sense? Perfect. If it doesn't, trust me, I've done the math. I think it makes sense. Unless you're a mathematician and that totally doesn't make sense, and then please leave a comment because I've made some grave mistakes and grave errors. Okay, next up is how you can do this yourself. I kind of hinted at this at the beginning of the video, but I'll bring it up again. There are three types of people watching this video. People who have massive wealth at this moment in time. People who are living paycheck to paycheck, and people who are somewhere in the middle. I just want to give you a few tips here, no matter which of those three people you are. If you want to make this work, no matter your financial skill level, keep these three things in mind. Make sure you have a stable source of income. Typically, that is a job. I know there's a lot of people out there trying to make a quick buck off of courses online, etc., but what you really need is not a get-rich-quick scheme. You need a day job, something that you can budget according to and work, and then you can save and invest. Stability is key, especially at the beginning. Now, you can do this on a variable income. Let's say you're a contractor, an entrepreneur, etc., but it does make it harder because you have variable income and you're not always going to see the exact same paycheck every single month. So you need to be dedicated to saving. Some months you might make $10,000 and then for 4 months later you make nothing. So you need to make sure that you have a very, very sound financial plan going forward if you are to invest. Speaking of savings, you got to save first. Save first and invest second. You've got to prioritize an emergency fund. If you don't have that, you can't be investing. For me, I go by this rule of thumb. I actually don't know if it's anyone else's, but this is my thought. Only invest money that you can afford to leave in the market for 10 to 15 years, because that's, from what I have seen, the market cycle from the absolute bottoms of recessions, etc., to the tops of bull markets. You don't want to be forced to pull out of the market at a loss because you need to pay your bills. That shouldn't happen, ever. Only invest money that you can afford to invest, and like long-term invest. You can't just invest money that you might need to put food on the table or put a house over your head. I hope a house doesn't appear over your head. Put a roof over your head. You can't have that in your mind when you're investing. You need to have that buffer. You need to have that emergency fund. And third, you need to surround yourself with the right people. You've probably heard this before. You're the average of the 5 people you hang around the most. Well, actually, think bigger than that, because that's kind of wrong. You're the average of everyone around you. Everyone who you interact with or associate with, you're the average of all of those people, even if they're on YouTube. Sorry, I'm affecting your averages. My shameless plug, if you want that support and encouragement, just leave a comment below and I'll actually get back to you. My channel's not that big that I can't get back to you. I'll just do that. There's only a few comments here and there. Oh, and don't forget, subscribe. It helps me out, and I am pivoting the channel towards more of a financial direction. I'm really interested in finances, etc. I always have been, but this is just kind of a recent occurrence that I'm like, wait, there's a lot of people asking me questions. I should answer those and kind of show what I'm doing for my finances. I know a lot of people, want to know. So this is me doing this. As for investing $50 a day, I'll be posting updates throughout the year on this YouTube channel. Whether or not there's gains or losses, we'll figure it out, and I'll share that with you. And along with the updates, I'll be sharing how I save so much money and decrease my expenses to the point of absolute absurdity. And finally, a tidbit of knowledge before I sign off. I'm just gonna read this one so I don't mess it up. Financial habits, just like regular habits, are like cables. You weave them a strand at a time until they're so strong that you can't break them. And I'm here to say, you're capable of doing this. Ha ha! I had to fit a pun in. Yeah. Okay, well, I will see you in the next video. Don't forget to subscribe. Bye!